Welcome back to the UK Crypto Podcast. I'm Paula and I'm joined by Matty. Crypto is constantly being described as something risky, dangerous, and something that people should be careful of, especially if you live here in the UK. But today we want to ask a more honest question. Is crypto actually risky? Or is it just misunderstood? And are most of the risks that people are talking about coming from the technology itself or just from how people are using it? Right, let's get into it. Before we continue, I just want to say a quick thank you to today's sponsor, eToro. eToro is a stocks, shares and crypto broker, and it has licenses globally, and it's currently the largest trading broker in the UK. What we like about eToro is it is for everyday investors. So whether you're brand new or you're already active, right now they're offering something genuinely valuable. Through our link, you get access to a stocks trading course. It's completely free, but it's worth $2,000. There's absolutely no extra cost to you. So if you want to improve your knowledge of the markets, investing, or how trading actually works, this is a great place to start. You'll find a link to the free course and the platform in the description of this video. All right, let's get into the episode.
So in today's episode, the question is being asked, is crypto actually risky or is it just misunderstood?
That's a great question. I absolutely love it. It's difficult, isn't it? Because crypto is always defined as risky without actually defining what the risk really is and where it comes from. Yeah. And it's probably a good thing for us to start talking about, because when we talk about risk assets, what is this risk that we're talking about? Is it just because it is more volatile than some of the other investments that you've got? Is it because it's faster? Is it because the crypto market's open all the time? Is it because of the scams that are out there?
Yeah, I mean, I think somebody will probably correct us in the comments if I'm wrong, but I believe the phrase risk asset comes from because that type of asset, not just crypto, but although crypto is the riskiest of all the risk assets, we know that, is because it's more risky than traditional finance and traditional products like stocks and shares. So it's more risky than those. Yeah, I think that's where it comes from. But the risks in crypto isn't just about that. No. There are way more risks than actually the reason it's got the label for being risky. Yeah. So really it should be risky asset, not just risk asset.
The risky asset.
The risky of all the risky assets.
But I think you're right. It is more, you need to have a bigger risk appetite if you're going into crypto than you do into something else because of the volatility. Because you've got huge amounts of swings in crypto that can be massively gainful. You can make huge amounts of profit, but you can also lose crypto and the amount of money you've invested in it in just as fast amount of time as you can make gains. Yeah. And I think that volatility is really where the traditional label of risk asset comes from. But there is so many other risks with crypto, and I think we're going to probably explore them further in this episode today. But volatility is very often framed as danger, and I think it's a difficult one, isn't it? Because that danger also is opportunity. Because in other risk assets, yes, they might not be as risky as crypto, but they also are not as profitable.
So it depends on people's appetite for risk, because the least risky thing you can do with your money is put it into a savings account, right? Now, millions and millions of people do that, and there is absolutely nothing wrong with that at all. But then you can start looking at other things, can't you? You can start looking at ISAs that are connected to stocks and shares, for an example. People can then start investing in stocks and shares. And then you can look at the more risky assets where you can be talking about gold, silver. Then you can go even more risky than that and you're looking at crypto. Yeah. But what I would say this is, if something is less risky, then quite often the gains are less.
Yeah, exactly.
The flip side of that is the losses can be less as well. So it's about somebody finding their happy medium of where they feel comfortable in. I would suggest that most people are into crypto because they are okay with risk. Otherwise, they would just keep their money in the bank.
Yeah. But I also think that diversification is going to be the best, most overall. If you were going to give anybody any advice, you would probably not say put all of your spare money into high risk assets.
Absolutely
And you
not.
want to spread that out into a more diversified portfolio. But that has to fit into everybody's own personal risk appetite, doesn't
Yeah.
it? Because you might have a big portfolio of investments, but actually they're all in low risk, and because that fits with your low risk appetite.
And there's
that's
nothing
okay
wrong with
as
that.
well.
You know?
Yeah, exactly.
There is that's my dad.
Yeah.
That's my dad.
Yeah.
He wants to play it slightly more risky than just leaving it in the bank.
Yeah.
But he doesn't want to go to the bookies, for example,
Yeah.
and start gambling with his
Yeah.
money. So he's a stocks and shares guy. He's an ISA guy. It's that traditional investor of that generation.
Yeah.
But our generation, especially the generations below us, I think we're the high end of that spectrum now. Everybody below us, it's going to become way more normal crypto. Whereas if you look at our age range, it's not so common. In fact,
Yeah.
we're in the minority of our age range.
100%.
But then we look at the children's age ranges as they start hitting, say, and they start getting to late teens, 20, 25, you'll find a big percentage of them will be looking at risky assets, which is crypto.
But I think that's probably comes with this technology that's involved, because new technology always looks risky to start with. But these children are being brought up with technology, so that risk, that scary is not there for them anymore. So I think that is going to be a generational change of just behaviour, because if they are integrating blockchain technology into TradFi, like I think they will moving forward, they won't really know any difference. And also, it's not scary for children to be accessing apps and wallets and exchanges like it would be for your dad, for instance.
You mean when the children get old enough to do that, you mean?
Yeah,
it's going to be normal
exactly,
their entire life is about accounts,
Apps,
passwords,
yeah,
logins.
yeah, exactly.
Whereas if you tried to teach my granddad any of that now,
Yeah.
it would feel alien to him.
Yeah, 100%.
Whereas I'm pretty confident if you got an average 15-year-old,
Yeah.
although you wouldn't because you don't want them invested in crypto right now, right?
Yeah.
If you got an average 15-year-old and you said that's how you set up an account, that's how you buy a crypto and that's how you sell it, I'm pretty confident that a huge percentage of children around that age range would be fully capable of doing it.
Absolutely.
Would they make the right decisions? Probably not, because they're children. What I'm saying is when it comes to using the technology, second nature.
Yeah.
And in fact, I bet there's stories out there somewhere where there's somebody that's going to be potentially older than us that wanted to get into crypto. They didn't know what to do, and their grandchild has helped them set up their accounts.
Absolutely.
It's going to have happened
Yeah,
somewhere. I don't know
absolutely.
of a story like that. But by the way, let us know in the comments if that's ever happened, because
Yeah.
I wonder if there's anybody in the wolf pack that's in that situation, because we've got some quite older guys in the wolf pack as well, haven't we?
Yeah.
I guarantee that's happened where they've gone, I want to do that, but I'm not sure about the technology, and they've got a younger person to help them.
But I think that we're talking about the younger generation that probably aren't into crypto yet. Yes, you're going to have people in their 20s that are quite tech savvy, and that's great. But I think that if you're looking at people maybe 30, 40 plus, this new technology, it does look worrying, doesn't it? Because it's not super easy to get involved in crypto. You need to learn how to buy crypto. You need to learn how to hold crypto. And that is a complete...
How to send crypto, how to receive crypto.
Yeah, exactly. There's so many more processes than there would be if you were just going to your traditional online bank. And I think sometimes people think, oh, it must be risky because it's more complex. And that brings a whole nother element, because is it more risky because it's more complex? Actually, I think once you know how to make these transactions on the blockchain, actually it's pretty simple.
It is, but there is one thing that I've noticed, that there are people making their risk much bigger because they don't understand what they're doing.
Yeah.
Right? And I think this one's important to talk about. So I'm talking about them exposing themselves more than they needed to scams. So
Okay, I'm glad that you said scams, because I didn't want that to be going anywhere.
What do you mean? Exposing themselves? Paula! But no, they are exposing themselves to scams more than they need
Yeah.
to. So I'll give you an example of what I mean, right? Everybody now knows that if somebody said, can you give me somebody that you don't know, by the way, can you please give me your bank card and your PIN code? What would you say to a random person?
Well, you're going to say no, aren't you?
Okay.
And everybody knows that now.
What about if it was somebody that contacted you from the support company from your bank, and they said, can you please, I'm going to send somebody around your house to pick up your card, and I also want your PIN code. What would you say to the bank?
Well, you're going to say no,
Okay.
obviously.
So in crypto, because so many people are involved in crypto but don't fully understand the risks there
Yeah.
are, how many people get caught out, because somebody has contacted them they think is in an official capacity,
Yeah.
and they say, please give me the keys to your wallet.
Yeah.
Please tell me what email address is on your exchange.
Yeah.
Please enter your password here.
Yeah.
And because it's in an official capacity, they're doing it because they don't understand the risk element of handing over that information.
Yeah.
Because the technology is relatively new to so many people. But we've had bank cards and PIN numbers for so long now that everybody, even my granddad, would know. Don't give somebody your bank card and the PIN code because they can go on a shopping spree.
So
But they don't understand that when it comes to crypto. And
Yeah.
so many people hand over that information so fast with a very basic scam. These scams aren't even complex.
No.
They literally go, I am person XYZ. I'm trusted because I come from this company. Do you believe me? And then they go, I believe you. And they go, excellent. You need to give me this information.
Yeah. Yeah.
And they don't understand how valuable that information
And
is.
it's interesting, actually, that you say that, because I actually set up an app on my phone about a couple of months ago, and I won't name the company because actually I don't necessarily
Name them.
No, I'm not going to. No, I'm not going to. But I bought some crypto. And the very next morning, I had a call on my mobile phone saying, I am from this
XYZ.
company.
Yeah.
And I didn't believe them, and I hung up. And it just made me really hyper vigilant to think that I had done this yesterday and today I'm getting a phone call. I know because...
Perfect timing.
Yeah.
It was just lucky timing.
Exactly. I know that most people would have thought those two things were connected. I don't believe those two things were connected. I think it was lucky that they called me on that day.
But some people would have fell for that.
But some people would definitely have fallen for that, because it was, you set up your account yesterday and then I'm going to call you today and make sure that you're okay with your account. And it was just... It's such a simple scam, but it's going to catch so many people out. And I think we've just got to be hyper vigilant about the scams out there. It's not just people contacting you from crypto exchanges. It could be social media scams. Look how many fake accounts that me and you have both got on social media with people trying to contact our audience to try and get access to their information. And somebody said to you the other day, I just want to kind of just check, would I be talking to Paula on a WhatsApp? And you said, no, Paula's not interested in talking to you about your crypto. And it was kind of in a tongue-in-cheek kind of way. But we're not going to be contacting people, but there are people out there on social media that will believe the fake accounts are people that they have seen talking, and influencers and social media content creators.
So at the peak, at the peak of my original Milkshake Matty TikTok account, getting up to 10 million views a month, the scams were savage with my face on it. Absolutely savage. The fake accounts there were unbelievable. And they always worked for the same reason, because the people they were messaging, they thought it was me.
Yeah, exactly.
And
exactly. Because
I
you
wanna
spent a long time trying to get your audience to trust in you and believe in you. And then when people think you're reaching out to them, it feels genuine.
I want to put this out here now. Paula and I will never, ever reach out to anybody to talk to you about your crypto.
Yeah.
If you find a way of talking to us, different scenario.
Yeah.
If you're in the Wolf Pack and you want to talk to us, different scenario.
Yeah.
If you're in the free crypto lift-off course and you want to use the chat facility to talk to myself, Paul, or one of the moderators, different scenario. We will never send you a WhatsApp message. We will never send you a Telegram message. And we will 100% will never send you a direct message on TikTok.
Yeah.
Because that is the hive of where they make their money with the scammers with content creator spaces. But people fall for it day in, day out. And I feel bad for them, because it's not because they're thick or they're naive. It's just because they got caught at the wrong time, at the wrong day, on the wrong moment, and they just had their guards down just a tiny bit.
Yeah, absolutely.
Bang.
Absolutely. And let's talk about the other scam that we were talking about in the Crypto Wolfpack community. Somebody was saying that their brother actually was in the middle of going into a meeting and then got a phone call and was pressured for information. And because he was in a rush himself...
Who was this? Can you say the name?
I think it was James's brother.
Okay.
Was saying that because he was pressured like time constraints, and because they were asking for information that they were saying was urgent, moment, he felt like he needed to give them that information at that time. And again, if somebody is pressuring you for information in a time pressured environment, you've got to think about
it's a
why.
red flag. It's a red flag.
Exactly.
If you're talking to somebody about your, first of all, number one way to keep yourself safe is never send your crypto to anybody ever for any reason, and you ain't going to get stung.
Yeah,
right.
Exactly.
If it's that type of scam where they're asking you to send it somewhere, don't send it to anybody. Don't. I mean nobody. Like, don't do it.
But also, if you have somebody on the phone telling you that somebody else has accessed your accounts in any way, I would just urge you to listen, get off the phone and contact wherever it is directly yourself, and just check through the official channels whether or not they're flagging up any issues.
Yeah.
Don't feel pressured in that moment on that phone call that you have to give anybody any of your information. Because
don't give anybody information on the phone.
Yeah.
If you get contacted by an exchange or whoever, or what you think is a crypto, the common one is Ledger, isn't it?
Yeah.
So you'll get a message from Ledger, a message from an exchange saying, we're from whoever, crypto.com or whatever.
Yeah.
I've talked to you about your account. And you go, oh yeah, what do you want to talk about? And then bang, they've got you because they know now they're going to go down these lines, right?
Exactly.
Quite often you have to remember they're calling you because they've got your phone number from a data leak.
Yeah.
Along with that phone number with the data leak came a list of emails. So by the time they've gone, can I just check the email address that it's connected to? And you'll say, well, I'm not going to tell you. Is the beginning part bop, bop, bop? And you're going to go, yes. They're going to go, okay, cool.
Yeah.
And then they've got you again. And then they'll start their spiel to reel you in.
And the other thing, this was never going to be a podcast about scamming, but if you get any emails, don't click on any links.
No. Ever.
Yeah. If you have, I don't know, for instance, you are using Bitchenix as a trading platform, and you get an email from Bitchenix and it's got any links on it, just don't click on them. Go onto your official account, go through your app, go and have a look. There'll be a notification section on all of the exchanges, and just go and have a look at and access the information that way, because you just need to make sure you keep yourself safe. Because what you've got to remember, when crypto was very first started, there was a lot of perceived media around the dark web and people using it for scamming. And then now this feeds into
criminals and drugs.
And now this feeds into having more scams. And what we don't want is you to feel put off because you feel like it's this dark and murky world, when actually we've just got to take more precautions because it's not regulated yet. There aren't as many regulations as if you held your money in the bank. So we've just got to take on this next layer of protection for ourselves, really, rather than relying on other people. Because obviously if your money got stolen from the bank, then the bank's got a level of protection for that for you.
But it's about education, isn't it? I think most people get caught out with these scams because they don't understand the how important the information they have not to give out is.
Yeah.
And I've said that about the bank card.
Yeah.
Everybody knows you don't give somebody your bank card and your PIN number.
Yeah.
Everybody knows that. But they don't realise the value of what this information is they're giving out. So I think that over time that will change, which probably means the scams will change.
Yeah.
By the time they're having to make too many phone calls to make it profitable, because too many people are going, you want me to give you what? I don't think so, mate.
Yeah.
But they'll change tact. But at the moment, their scams are very simple.
Yeah.
They're very simple,
and they're
really.
working. They're working. And the reason why we know they're working is because they're still doing it. Because if they weren't working,
they wouldn't be doing it.
Exactly. Yeah, exactly. It is difficult, but we've just got to make sure that we share as much education as we can around this topic. And if you guys are not sure about any of the products that you're using, go and do some more research. Go and speak to somebody at wherever it is and get some questions answered. But just feel like you're the one that's in control of this. Don't feel pressured by anybody else in this space.
I've actually got a preferred list of product providers out there. Some of them I'm sponsored by and some of them I'm not. I've developed that list to keep people safe because it's such a minefield out there. And I get it, especially if you're newer into crypto, because let's face it, most people that do get caught out by scams is because they're in their early years of crypto. A lot of the old heads now, they've seen this go around multiple times with the same scam but with different labels on it.
I mean, it's a bit like if you want to go and find an exchange and you are going onto a random Google search and you see the first advert for an exchange, well, you need to do a little bit more due diligence than that. Make sure you're actually accessing the correct sites before you're going on there. So,
do you know people that are using it? Do you know people that have made money on it? Do you know people that have took their money out?
Exactly,
That's really, really important.
Yeah. And I think if we're going to go back, because this whole podcast is about risk and it's about making making sure that we understand whether crypto really is as risky as it's perceived. And then we're always going to talk about whether or not is it price risk or is it behaviour risk, because those two things are not the same. We've got the idea that the price is volatile, so we've got a risk. If you invest your money into spot and the price goes up, then that's obviously wonderful. If the price goes down, that's not so great. And those swings are massive within crypto. But is that the most risky thing, or is it the behaviour that's attached to using crypto and the risks that people are taking themselves?
Do you mean things like the misuse of leverage, for example?
Absolutely,
Okay.
absolutely.
So I would put the misuse of leverage right up there with the level of risk when it comes to people getting done by scammers.
Yeah.
Because again, just like what I said about people don't understand the value of the information they have and they're handing it over willingly to a scammer by a very few basic questions.
Yeah.
The same with leverage.
Yeah.
People are understanding how dangerous leverage is. Therefore, they're over leveraging and they're losing money really quickly.
Yeah.
And I think, again, do you know what? I think I'm kind of working out. I didn't realize this when we started this podcast episode, but everything's coming down to education here.
Yeah.
Because you can teach people about that.
Yeah.
You can teach people about the common scams. You can teach people how important their information is.
Yeah.
You can teach people about managing leverage and risk properly. But they don't know it until they know it.
Yeah.
So the people that get scammed, like, I don't think bad of them. I don't think, oh my God, why would you let that happen? You're so stupid.
No.
I think, God, I bet you wish you'd have learned something about this previously.
Absolutely.
The same with people that over leverage.
Absolutely.
It doesn't take long. It doesn't take too long until they go, I'm never gonna leverage trade again because now I'm skint.
Yeah.
Or they're going to go, I need to adjust my method, my strategy. I need to educate myself.
Yeah.
One of those two things are going to happen.
It's difficult though with leverage, because when you go onto the exchanges and you have got a sliding bar and your leverage could go from like no leverage all the way up to, in some cases, 500x.
Oh, mate.
And we talk about a low leverage trade potentially being 2 or 3 times leverage, and then a high leverage trade could be anything from maybe 25 leverage, 25 plus.
That's in the eye of the beholder, though. So,
Yeah,
just because we word like that, so there are people that would say anything between 20 and say 50 as not a high leverage trade. They are to me and our community because of the style that we use. But there will be people out there that regularly will be doing 70, 80, 90, 100x leverage. So when they're talking, they'll go, I only did a little one today. And I'll say, what is it? And they go, 40x. And I'm like, Jesus.
But the thing is what I guess what I was trying to get at is it doesn't feel like it's a high leverage if it's in the middle of the slidey bar. And if yours goes from 0 to 500x,
I've never thought of it like that.
The middle of your slidey bar is 250x.
So
that's massively high leverage.
If you look at I'm actually not going to name that exchange. So there's one particular exchange, and you can go up to 500x, I think it is. Yeah. So on that particular exchange, if you go to 500x and then you slide it to 125x, well, I'm at the bottom end of the scale.
Exactly.
But actually, that's insane numbers.
Yeah, exactly.
Yeah. I don't know. I've never thought about that. Do you think that's why they might do it?
I think it's maybe got a little chance.
Wow. How have I never thought of that? Fair play. Well done, Paula.
Thanks.
Well done. You've rumbled them. You've rumbled them. You've rumbled them.
Because, listen, let's face it, the exchanges are there to make money. Yes, they put parameters in to make sure that you feel like you are protected as much as possible. Yes, they fit in with compliance and regulation and all the rest of it. And they are doing a wonderful job of giving us access to being able to leverage, because if we wanted to put those kind of trades on ourselves, we would need to find the capital. So, yes, exchanges are great and exchanges are there, but they are also businesses and they are there to make money. And I'm not going to detract away from that. That's exactly what their role is in this. So we've just got to make sure that actually, if you are going to leverage trade, you're going back with a strategy, you're learning these cycles, you're learning how it feels in certain parts of it, you're learning what it looks like when it's a pullback and it's not, the market's not going to collapse. And it's just going into that and being a high leverage trader, well, actually there's a gap in that, isn't there? You've got to learn your positions first, learn your job first before you go in full blown.
And I think what you're talking about there is absolutely right. There's no doubt about it, which is why I think actually a more balanced approach to your portfolio is a good idea.
Yeah.
Now we think about today's sponsor, which is eToro, stocks and shares predominantly as a broker. They also do crypto as well and derivatives, right?
And ISAs.
And ISAs now as well.
Yeah.
So they've got a lot of products there. And actually, if you are thinking about where you're going to invest, probably hedging your bets with a few things. Now, property, always a good one. Normal cash savings,
Yeah.
important.
Yeah.
Crypto as a high risk asset, something in the middle, stocks and shares.
Yeah.
A balance of these things is good. I think too many people will go all in on leverage trading. For example, again, I won't name this person. It's somebody that I know relatively well. I was talking to them about what crypto they have. Very, very small spot holdings, everything on leverage trading.
Yeah.
And I'm like, do you think you might want to start taking some profits and putting them either in the bank or at least in a spot hold?
Yeah.
And they're like, no, I'm just going to keep going and keep going and keep going and keep going. And I'm going, I hope it works for them. For me, that's too risky for me.
Yeah.
Yeah. That's too risky. For me, you need to be spreading a little bit. But listen,
Yeah.
I'm not his dad.
Yeah.
I'm not telling him what to do.
Yeah.
I just shared my opinion. I hope one day he doesn't have to come to me and go, God, you was right.
Well, because overexposure turns normal moves into disasters, doesn't it?
Yeah.
Because let's be honest, overexposing yourself in any capacity, in any investment, it doesn't make sense. We've got to diversify. We've got to risk manage our portfolio better than that.
But there's something that I think too many people don't understand: the way political events affect crypto. Right. So I'll give you an example. I'm going to talk about real life scenarios going on right now. At the point of recording this, there's a lot of things going on around the world, completely non-crypto related. But I look for it multiple times a day at the moment.
Yeah.
One of them is a situation in Iran. By the time this episode comes out, I have no idea how this is going to pan out. Right now, there is a revolution taking place.
Mm-hmm.
Right now, the Ayatollah over there is now making all sorts of threats to the West.
Yeah.
We've got other people inside Iran saying, no, we don't want a problem. There's no problem here at all.
Yeah.
You've got Israel now getting involved.
Yeah.
We've now got Russia saying that they don't want the Americans to get involved.
Yeah.
We've got China saying, if you get in the way of the Iranian oil coming to China, then we've got a problem. Right now, this is looking dirty and messy by the hour. I don't know how it's going to pan out. Let me tell you now, if you've got all your assets on leverage trading and all of a sudden a stray missile goes in either direction, in any direction from anybody, it's a problem. The markets will crash in a second. Yes, they'll bounce back, but you're leverage trading only.
Yeah.
Wipe out.
Yeah.
Done. 20 minutes, bang, whole
Yeah.
portfolio gone.
Yeah.
Which is why, in my opinion, you need this separation of some low risk, some real safety in cash, some low risk, some property. Then as you go up the scale, more and more risky until you've got the very, very top bit.
Yeah.
And the most risky assets, most risky thing at all you can do, in my opinion, is leverage trading.
Mm-hmm.
Has to be your smallest pot.
Yeah.
Has to be your smallest pot,
Yeah.
in my view. As I
Yeah.
say, I'm not people's dads. I'm not telling them what to do. It's just my opinion.
Yeah, because on top of taking all of those things into account, we know that risks do exist in traditional finance as well as in crypto. It's not just crypto. It's just that traditional finance is more familiar to people.
Yeah.
And I think we can't expect that there are no counterparty risks by holding your money in banks. It's just that actually we've accepted those risks because we're more used to the system.
Well, we've also got protection in the UK. We've got a protection. If you put anything under, I think it's 86 grand in the bank, and there's a problem, you're covered. So in other words, if the bank got robbed, or the bank collapsed, we're covered by the UK government under the FCA rules, right? Now, we don't have that kind of protection in crypto. So if an exchange goes pop, you've lost your money, right? So that is a problem, isn't it, over in the UK? So that is a more of a risk than it is in the banks. But banks also have their own risk because most people are losing money in crypto. If we go back to the scamming thing again, right? Well, you can get scammed out your money from the bank.
Yeah.
So I had... I'm going to share it. It's the first time I've ever shared this on social media. My granddad actually got scammed via a bank scam.
Yeah.
So somebody rang him up, pretended to be the bank, and he believed them. They had him on the phone for an hour and a half before he rumbled them.
Yeah.
So luckily, he did realise what was going on towards the end of the call and the damage was limited.
Yeah.
But the point I'm saying is, if you get scammed in any scenario, it's a problem.
Yeah.
So these scams do exist in the TradFi world as well as the new world.
Yeah. I mean, it's interesting to me about the whole the volatility of geopolitics, and then with the banking, and then we've got the whole element of stable coins that are in the background of this, and it's a really interesting story for crypto just moving forward. And when we think about it being risky, there are some safer parts of crypto.
Yeah.
I think some people just look at crypto as the entity that is really volatile, but obviously you've got the stablecoins element of that as well. And I think that personally, and I've said this before on the podcast, I really believe that this blockchain technology is going to be so integrated into people's lives moving forward. And I don't think in the that too distant future, then actually the more people we can educate in this space, the more people we can talk to about the risks and the scams and the things that are going to keep them safe, the more people that are actually going to be able to use some of this technology. And that's going to create loads more users in the space, which is going to improve the amount of liquidity in crypto, and everything rolls from there, which is why I think these conversations that we're having are just so important.
Well, I think what's really important, I see this as part of the role of what I do, because we've got a community, because I've got a position on social media with a voice. I think it's important that we do I know we've talked about education already, but I think we've almost got a responsibility for it, because the more we can educate people to understand the risks from the bad people and the bad things that could happen, the less scary it's going to feel of the unknown, because that uncertainty can make some people check out of crypto. Yeah,
100%.
So if you can teach them, this is what the risks are, this is what it is, this is what it looks like, this is what it smells like, this is what it's going to feel like if one of these things happen during one day, then you can prep them so they become resilient to it, so it doesn't happen to them. And it will stop them opting out of crypto, because we don't want people to opt out. We want more people to opt in. So I think that education route is important. Now, without naming too many platforms, there is one platform that makes that kind of education incredibly difficult. YouTube, by the way, is incredibly good for that. I can make any content I want on YouTube that it's educational, to teach people how to keep themselves safe, and they're okay with that. There are other platforms over on the dark side that if you make that kind of content, they restrict it. Which tells you everything you need to know about certain platforms.
And I think also crypto is global, but regulations are local, and we've got to work within the parameters of wherever we live, wherever we work, wherever we pay our taxes. It's more difficult at the moment for UK crypto users. I feel like a lot of people are feeling that, because our legislation in the UK and our regulations are much tighter than others. And I think that kind of comes from the FCA being so risk averse. They seem to want to be protecting the users, but a lot of crypto users feel like they're actually stifling them.
I mean, I understand why that risk-first mindset, I think it's called, isn't it? Risk-first mindset is because the bad bits of crypto get the headlines. So, for instance, there is a major news organ. In fact, I'm not going to say it. The ITN News want to talk to me and do a complete program on a particular story that I've got, but to do with the scammers impersonating me and attacking people. ITN News don't want to talk to me about all the thousands of people that have done really good things via my social media. They want to talk about this sensational headline of how many people have been scammed because of the scammers pretending to be you. How much is that worth? Not once did they say, how much do you think your community has made in crypto over the last year? They don't care. So they're locking onto that negative thing. So that spirals, and that puts pressure on the authorities. So I get it that it's not the FCA's fault, because that's where the pressure will come up. Because then you've got MPs going, have you seen how many people are getting scammed by crypto? Well, when are we going to tighten the regulations? And I get it. But I think more noise needs to be made about the positive sides.
Yeah, because actually I know that the FCA is risk first, and in one respect, I do respect it, because once they pass the regulations that are stricter than most parts of the world, then actually it's going to give us some much more protective frameworks to move forward. And I believe that actually we will probably have more protective safety around UK users than other areas in the world, and that can only be a good thing if crypto is going to scale. So I can understand at the moment there's probably a lot of frustration. It feels like things are moving slow in the UK. It feels like maybe we're being held back, but I think crypto is not going anywhere. Crypto is growing and growing, and I think mass adoption will come. And with mass adoption, that's long term. So actually we could end up with the UK users feeling like they've actually got a little bit more protection than some places around the world once they are approved.
I think so, especially if once the US framework is out in full. Don't forget they've sent them on charge over to the UK to see if we can get the two frameworks to marry up together. I think once that happens, I think we're going to see a big shift here in the UK.
Well, actually, I think that with the delay in the Clarity Act and obviously time of recording, we've seen that has been held back in the US. I think that it looks like the UK and Europe might even be a little bit of a step ahead of the US at the moment.
I think the Clarity Act will still go through first. I mean, listen, I could be wrong. At the date of recording this, it was supposed to happen yesterday. The CEO of Coinbase has stepped in and said, we believe this is unfair because you're trying to protect the banks when it comes to the profits from stablecoins, from yields and staking and stuff like that. I think that will get dealt with relatively quickly. I hope that will get dealt with relatively quickly. I can't see Coinbase backing down, and I can't see the government backing down. So how they find the middle ground on that, I don't know. But I think there's too much money involved for them not to find a middle ground. Yeah. So hopefully that'll pan out, because especially if you are in any USA owned cryptos, like an XRP as an example, then you're going to benefit from that.
Yeah, absolutely.
There's no doubt about that.
Absolutely. So I guess let's take this back to the original question of the podcast. Is crypto actually risky, or is it just misunderstood? What would you say to anybody that's really worried about going into crypto because they feel like, oh my God, this is really the dark side?
So if you look at crypto and you look at the volatility, that's what most people will be looking at when they're calling it a risk asset. We've gone off and talked about some other stuff that we believe also makes it risky. Yeah. But that's the traditional meaning of that word. Actually, that volatility is okay, because that's how you can make short-term money. But actually, if new people into crypto change their mindset and they change it to more of a long-term outlook, who cares if you're buying on today, don't care what the price is tomorrow or next week or next month. If you start thinking in years rather than weeks and months, all of a sudden your mindset completely changes and you're going to feel it like it's a lot less risky. Yeah. Especially if you're investing in the large caps. And the large caps I'm talking about is the ones by the biggest market cap. So at the moment, it's things like Bitcoin, Ethereum, XRP, Solana, the big ones. Yeah. If they're looking at those and they're thinking long term, especially in chunks of 3, 4, 5, 6 years at a time, all of a sudden that perceived risk is going to feel a lot less once the years have rolled by. Yeah. I think that would be important. So I would be saying that if you are relatively new, you think, oh my God, this is a risky thing, extend your time frame of all your expectations. Yeah. If you're looking for, if you want to make money by tomorrow, you probably need to be leverage trading. Yeah. And if you're new into crypto, leverage trading might not be for you yet. Yeah. So when it comes to your spot holdings, just extend that time. And all of a sudden that perceived risk will feel slightly different. Yeah. And if you can change how the perceived risk feels through extending the timeframes that you're investing in, educating yourself around some of the other risks that we've talked about today, I think you're going to be in a much better position to be making real informed decisions, because crypto isn't going anywhere. So we want everybody who's not currently involved or new in this field to actually have more information so that they can make these decisions in a more informed way, and then join all of these opportunities that are there, because I think there is huge amounts of opportunities for people to be investing in crypto. I think there is money to be made, but you've just got to do that whilst managing your risk in the best possible way you can. I think that's a great way to wrap up today's episode. Thank you very much, Paula, for joining me today. I think it's been really, really fun. I can't wait to do more and more of these. Just to let you know as well, we're going to start having some guests on to the podcast as well. So anybody that is interested in coming to join us as a guest, if you want to nominate somebody you think would be a good guest, go and check out the link in the description. There's an email address in there so you can send us a direct message. Don't forget to follow us on our socials. Again, more links in the description to both of our socials. And a big thank you to today's sponsor of the video, which is eToro, which is traditionally a stocks and shares broker. They also now have entered into the crypto and the ISAs world as well. And remember, right now you can grab their completely free stocks and shares trading course. That course is worth over $2,000, but with the link in the description, you're going to access it for completely free. Thank you once again for watching us. We'll see you on the next one.